Hi, this is Joseph. It is Thursday, June 11th, 2015. I wanted to talk about the state of the market right now. We're noticing and watching a lot of reaction due to headline news, not necessarily economic data. There have been, and you've probably witnessed it over the past couple of weeks, specifically last week, we were talking about in a chat room about a couple of events that occurred right about 9 o'clock New York time, and then the following day it was at 9:30 New York time. We actually traded these events, and they're basically articles or comments that are posted on the internet designed to move the euro dollar or the pound dollar, whichever currency it is that this information reflects. For example, last week it was on the euro dollar and it was about the situation in Greece. And these moves are designed to more or less move up maybe 15, 10 minutes or so, and then the whole thing reverses. So you may have watched price over the past few weeks move up without really any economic data, and you're probably confused why it's moving, and then it immediately collapses and sells off, for example, if it moves up, and everything comes right back to where it started. And it may confuse you or frustrate you, and that's often due to comments. They're not real economic data reports. In many cases, these comments are unconfirmed, so please be very, very careful about trading in this environment. It's continued through this week. We watched a couple of unconfirmed reports coming out that came out this morning during the London and New York session that also moved price and created these spikes. The same thing happened. This was a little bit different, but the same thing pretty much happened with the dollar yen yesterday during the Asian session. There were some comments out of the Bank of Japan, and then after a while it just stops. They stop making comments even though they're pressed for more information. However, some of these other comments that I'm talking about last week were definitely unconfirmed, and they were just designed to move price. There's a lot of conspiracy theories as to why that happens. In some cases, some people will speculate that there's somebody out there or a large company that's placing an order and will actually issue out this statement, which is a fabricated statement. There's no truth in the statement at all, and it will move price. They're in the trade, and then they close the position within 5 to 10 minutes afterwards and make quite a bit of money on the move and the reaction. One in particular that you probably remember was last Friday, just before the New York market opened. There was it was a comment. Actually, it wasn't really an economic announcement. It was just a comment, and it was spread throughout the internet. It moved the euro dollar, and it also affected the dollar. And it was about the article was basically a French official made a comment about President Obama's comment on the current state of the strength of the U.S. dollar, and that caused a reaction in the market. It affected the U.S. dollar, and it affected the pound dollar and the euro dollar and a few other currencies. But you can see what I'm talking about here. I think if you're trading this in this type of environment where the market's moving quickly and reacting quickly to unconfirmed reports and unconfirmed statements, it's unfortunate that a lot of these websites that post these comments don't try to validate any of it and don't try to confirm it. Later on in the trading day, after the New York trading session started, President Obama on Friday came out, and one of the first things that he made a comment on was the fact that he does not and did not make the comment about the US dollar. So he was made aware of that fact, and he was made aware of the fact that it could potentially have an impact on the market. It had an impact on the currencies that we trade, and it was a completely fabricated, totally false statement. Nobody said that. It was just designed to spook the market, cause the market to move in the same direction that a major order was placed, and it allowed them to make a lot of money in that off of that initial reaction. Again, a lot of these reactions only last about approximately 10 minutes, and then the entire thing is collapsed. Usually there's a comment or another statement that's released to the internet about 10 to 15 minutes later, which basically does not confirm or makes the comment that it's not a confirmed statement, and the entire trade is over with. So that's why you probably see some of these spikes where you think that there's something happening in the market and you try to jump in, and then the whole thing reverses. So you have to be really careful in this environment. That's what we're actually trading off of in the last 2 weeks. It's made price and trading very, very choppy, very, very difficult to trade. There really isn't a whole lot of trending opportunities here. If we go to the larger time frames, the daily charts, I want to go to the daily charts, and here you can see some of the activity that has taken place over the last couple of trading sessions. So we actually have a trade, an open trade right now on the euro yen. Let's go ahead and start with that one. The euro yen, we've got some really strong bearish signals. We've got a lot of high wave candles in here, indecision, and then yesterday we had that bearish reversal candle pattern. This is somewhat an evening star pattern here, definitely engulfing. Three candle pattern, daily chart on the euro yen. We can't exclude the possibility of a retracement. I don't know if it's going to continue in the same direction up. It looks like the trend so far is going to continue. We're trading this move to the downside as a retracement, not necessarily a complete reversal. I'm not really at this moment convinced that it's a total reversal and price is going to come back down and take out this low here at 133.07. It's a possibility, but it has a lot to do here in order for me to be convinced that it's going to come back down and take out these lows. At this moment, it looks like it's just going to create a pullback. It could come back down and retest this old resistance level that it broke out of, which is 136.68. So we're going to continue to manage this trade. It is taken quite a long time. If we go to some of the short-term time frames like the 30-minute and 1 hour, you can see these trades are just going sideways and they're not really moving all that far. You can see the consolidation in here prior to yesterday's reversal signal candle in here. So we're going to hold on and manage this trade. Hopefully it'll turn out and it'll pay us quite a bit. Initially, I'm looking at about a 60 pip target, but if it continues and moves through that 00 number, I might be able to pick up about 100 pips on this trade if this is in fact a confirmed reversal signal candle and we get a significant pullback on Friday. If we go to the euro dollar daily chart here, again, we can see another reversal signal candle in here. It hasn't closed just yet. We've got to wait a little bit longer for this one. In some cases, we're going to see one currency pair lead another, even though they might be closely related. Here, the euro dollar, this might continue down on Friday. I don't know yet. We still need confirmation on this one. We've got the pound dollar in here. It is reaching this old resistance point. It's one of the reasons that I didn't go long the pound dollar today. It is reaching major resistance, and this is the old high here on the daily chart at 1.5551. Actually, if you remember trading back in April, we were actually trading this breakout, and this was the anticipated level that was going to create some resistance, and that's what caused that pullback. We stopped trading it up here, but we did trade the breakout to the upside to this level. Now it looks like it's just creating a brand new range of consolidation with that high here and this low, but it is finding some temporary resistance here at this old resistance point, which is back in February. The dollar yen did break out of this old long-term resistance or consolidation range and resistance point. Obviously, this broke out. That was May 26th. But again, at this point, we're seeing a pretty significant pullback. I don't know that the move to the downside is over just yet. It could continue. It could test this old support level a little bit closer, or perhaps even go through it and then come right back down inside of this range of consolidation. I'm just not too sure. I don't know if this candle that we see here, this bullish candle, is enough to really anticipate price to resume that uptrend. There was a lot of speculation that we're not going to see a whole lot more yen weakness, but that's yet to be seen. I mean, even technically, I'm still not too convinced just yet. I still need a little more information to be convinced of that. So that's really what we're trading off of. Again, it's been pretty consolidated. You can see for the last few days, these doji candles here, I refer to them also as high wave candles here on the euro dollar daily chart. They're really just showing a lot of indecision. And then again, going back to the pound dollar daily chart, you can see how it's just found this resistance point, and then again creating not a whole lot of opportunity. I mean, these moves, they're moving, but they're taking a really long time to really get to any potential targets. So we're going to do it carefully. There's been a lot of retracements, deep retracements. If you're going to use a small stop loss in this type of environment, it might not work. And again, it's because in most cases, during the more active sessions, you're going to see some of these false statements that are designed to move the market for about 10 to 15 minutes. Somebody's making money on that report, but be prepared to take profits quickly. Don't hold on to the trade too long until we're out of this type of condition, this type of market environment. So again, we're still holding on to our euro yen trade. We'll see how that one turns out. Hopefully we can pick up about 60 to 100 pips on this trade. And then I'll do another update when the market's closed on Friday after the New York session.